Good morning, friends and clients. It's March the 11th, 2020. The market has just opened, and both Scott and I and our entire team felt like that this would be the best way to continue our communication together. So there's a lot of information going on in the news. Quite frankly, it's a little bit overwhelming. So as always, what we hope to do is to rely on the data and the facts that we have currently. So here's sort of where we are. We're about 21 days into what seems to be sort of an unwinding in the markets. In February 20th is when we saw the market sort of roll over, and it feels like really every day you turn on your TV, it's up 1,000, down 1,000, up 1,000, down 1,000. Is it a big deal? Is it a little deal? And so much information and so much varying opinions from really intellectual and resourceful people. So what should we make of this? Well, just like you, we're finding out new information about the coronavirus and its potential impacts sort of day by day, just like the rest of the public. But we have friends and colleagues on the ground in places like Italy, and so getting to understand a little bit about how it's affecting folks in different places. So a couple of things that we think are really important. Number one is we could go lower from here. The markets could go down another 10, 15%. However, let's compare that to where we were in, say, 2008 and 9. In 2008, the market was pricing in a 49% reduction in corporate profits. So to say that sort of another way, the market expected corporate America's profits to be cut in half because of the Great Recession. Today, based off of the models that we use, the market is expecting a 79% reduction in corporate profits. Way overblown. 50% worse than what we saw in the second or third worst crisis in American economic history in 2008. So to say we think things are a little overblown or overshot would probably be a little bit of an understatement. Now, the reality is that in short-term moves and in panic situations, the market's a lot like a falling knife. And so fortunately, we had been planning for some sort of volatility in the market in 2020. And here are a couple of things to remember. Number one, we never want to be reactionary investors. The cash that we've built in each one of your accounts has been strategic. The buying that you've seen over the last several weeks has also been strategic. But we don't want to try and time the market or do anything that deviates from our long-term, prudent investment fundamentals. And so many folks will even say, well, the economy it's only a matter of time before we fall through the trap door, just like we did in 2008. Here's a big difference. The underlying strength of the economy in 2008 and 9 was a lot like a cloud. Once you get to it, you just kind of keep falling. The economy today is a lot more like a strong piece of wood. You get to it, it bends a little bit, but it doesn't break. The underlying economy in both January and February was in expansion. We were growing. We were flourishing. Things are going well as the U.S. economy continues to progress and expand. Now, will the coronavirus have an impact on corporate profits? Of course it will. Our estimates were that we were looking in that 11 to 12% range for corporate America. We're probably looking in the 6 to 8% range. Now, as we uncover, there's so much information that even medical professionals don't know. But remember, our primary concern is a couple of things. Number one, it's for your health and safety and the health and safety of our team members, your friends and family, and our friends and family. Number two is the protection of your assets. Our team is dialed in and on top of where we are, tracking information. We're having calls and resource outlets with medical professionals at top universities and hospitals, with money managers in the biotechnology and pharmaceutical space, trying to understand, what does this mean as a population, as a society? Is this like the flu? Is it different than the flu? All of those sorts of questions. But also, and equally as important, how will this affect the markets and how does this affect your portfolio? So while we expect there to be continued volatility, really until information sort of becomes solid and concrete, We're using this volatility as an opportunity for our investors. So, as always, we have long-term, prudent investment fundamentals that we follow. And today, we are not changing at all our investment outlook for the year. We still believe that we're trending towards 32,500 on the Dow and the S&P north of 3,400. As more information comes out, we'll continue to communicate via video just because it's an easy way for you to see and understand where we are and what we're thinking. But again, following basic doctors' guidance on washing your hands and those sorts of things will help alleviate a lot of tensions and pressures. But let me finish by saying our team is concerned and thoughtful about you, your health, and certainly about the protection of your assets. If you need anything in the meantime, our phone lines are on, our emails are up, and we're ready to help walk through what we're thinking and why we're thinking. We look forward to seeing you soon.